Hello, everyone. Thank you for joining us today. I'm Maria Horat, a relocation expert out of Northern California. And today I'm joined by my son, Alexander Horat, who's also a real estate agent, and we both work in Northern California. Today we want to talk about the housing affordability issue going on here in the state. And we particularly want to focus our attention in the San Francisco Bay Area and take a look at the different counties down there and how they have done in the last year in regards to the market appreciation, or whether the prices have gone down, and also the sales, the amount of sales, what has happened in the last 12 months, and focus on some of the issues going on there. So with that, I want to ask you, Alex, what your thoughts are, and I know you have some information you wanted to share.
Oh yes, hello everyone. Thank you for watching. And yeah, there seems to be a net migration going on in California. A lot of people seem to be moving out of the state. California actually lost population the first time in like 100 years, so that's really concerning for real estate markets in the state of California. So right now we're focusing exclusively on the Bay Area. So this is a really good map. It shows, has the exodus hit your zip code? So this shows inbound and outbound people. So red basically means that people are moving out of those neighborhoods, and blue means people are moving in. White means it's kind of staying steady. So if we look at San Francisco, which is one of the most important neighborhoods in the Bay Area, we see that there's a lot of net migration, minus 5,000 households in this one. South San Francisco, we see minus 2,000 households. And Oakland, we see a lot of people moving out Oakland. Berkeley. It seems like in Contra Costa County, Walnut Creek, there's a slight amount of people moving out of there, but there seems to be a decent amount of people moving into places like Danville and other areas around there. Um, and Antioch, it has a net decrease in population, minus 4,000 households. So we see a lot of people moving out of these areas. Union City, Fremont, they're moving out of these areas. Even Palo Alto, they're moving out of, which seems concerning. San Jose. So if you would like to start talking about uh, basically how much housing prices have gone down in these areas, that would be really appreciated.
Yeah, let me go ahead and share my screen now. I wanted to show some information by the California Association of Realtors and just focus on the Bay Area today. So we have Alameda, Contra Costa, Marine, Napa, San Francisco, San Mateo, Santa Clara, Solano, and Sonoma. So we have seen in year to year change, a decline in Alameda of the prices of almost 7%, while at the same time, the amount of sales have decreased by 8.3%, and the month to month, and the sales year to year. So there's 30% less sales this year at the same time, and it's August 2023, as opposed to last year.
Yeah.
Contra Costa, they saw a slight increase on the price, going up month to month by 4.7, and year to year, meaning as opposed to last year, a half a percentage, but the sales have declined 7.5%, month to month, and year to year, 18%. I want to focus on the worst, on the losers for the Bay Area as far as price declines and sales. So San Francisco, they had a decline of 16.1% in prices, home prices, year to year, and the sales about the same, 16.7%, which is telling us that they still have a supply constraint. But as you were mentioning, Alex, people are leaving the cities, like San Francisco.
Yeah.
We know have a huge homeless population, just highly regulated, really difficult to be able to afford to rent or buy a home. While everything else is increasing, wages are still the same. So people are just getting out of that city and either moving to adjacent areas that might be more affordable. like we can mention the winner here, Contra Costa County, not by much, but they had an increase of a 0.5% in prices as opposed to last year. Still, the sales are down by 18% as opposed to last
Crazy.
year. So, we're seeing still the supply constraints, meaning that there's not a whole lot available for sale. It's starting to pick up, but not quite as much. But people might be,
It
Contra
looks
Costa
like it
County.
looks like
Go ahead.
it looks like San Mateo had one of the few increases in sales at 3%, but that
Yeah.
was the only place. But I think the reason why we're seeing a decrease in sales right now is because less people are selling because of higher interest rates. They're not able to move into a new house, with similar interest rates like they have now. So unless they own their house free and clear, they're probably not going to be moving unless they take a downgrade or something like that. So I think that's also causing prices to go down in the Bay Area, in San Francisco. And also, a lot of people just want to get out of the Bay Area, out of California in general, as was shown in that map, especially with San Francisco. It was all in the red. People were leaving San Francisco in droves, for example, and moving either to more suburban or rural areas in California or moving out of the state entirely.
Yeah, so while some areas are gaining a little bit of population overall, the Bay Area is having a mass exodus. And we will be talking about other areas in the state in some other later videos, but definitely of course, the interest rates have been a huge factor, how highly regulated the state is, and the cities, how unaffordable it is if you can even find homes for rent. Wages are still the same. Homeowners insurance is on the rise. We just lost a couple of the biggest insurance companies are not writing new policies anymore in California.
That's true. That's true. And also I think it's deceptive too that prices are going down, yes, but the mortgage and how much that costs to buy that property has vastly increased, so your payments are going to be higher as well.
Yeah, just to put as an example, if you could, $300,000 house costs you $1,500 a month. Now it's costing you $3,000 a month for the same house. So, and also as far as investment opportunities goes, if you have to get a loan, doesn't really make a whole lot of sense in this area to buy a rental property unless you're buying it all cash or have plenty of equity where you can see a positive cash flow. So overall, San Francisco is the biggest loser as far as sales and price decline. Second, we had Napa, and third, Marin County, fourth, Solano. I'm sorry, Alameda County, then Solano, then Sonoma County, and last, Contra Costa, which seems to be a little bit ahead as far as the prices, but then again, they're having a huge decline on the amount of sales. So people can't afford to sell their homes either, because where are they going to move? They don't have enough equity in their homes to afford to go someplace else. They're just going to stay put at their 3% interest rate. So
Yeah, but people who have the ability to move out of the Bay Area, say they own their house free and clear, it may be a smart and wise decision to protect your equity. Say you own a house in San Francisco, we saw a 16% decline just in 1 year. So it might be wise for you to sell your house in San Francisco now and buy in a new thriving market that's starting to actually increase compared to San Francisco, so you can protect your equity and the money that you have in your house already.
yeah,
And if you do choose that, we could definitely assist you with that. We're real estate agents in here in California, and we can do real estate all within the state of California if you're interested in selling your house in the Bay Area, and we could help you find a new house um,
yeah,
as
and
well.
also if you want to move out of state, we can also help you be in contact with a realtor, a trusted realtor that will fit your what you're looking for, who can help you and spend the time with you and assist you in providing you with information and also what's available in the market that you're looking for. And we are going to be making some videos basically evaluating what other markets are doing. Overall, nationwide, we're seeing kind of the same trends, but we know that California is by far the most unaffordable state as far as housing goes and many other aspects. But there's a lot of in play, not just your interest rates, but your homeowners insurance also skyrocketing, which is also happening in other states as far as the homeowners insurance, like Florida and the Sun Belt states. It's just becoming more unaffordable to live anywhere. So, but we'll be covering each area. But yeah, if you're planning on relocating, definitely let us know. So, what can you tell me about Contra Costa County, Alex? I know is how much of people are they
Well,
getting
it
versus
it doesn't look as big of a loss. Like Walnut Creek zip code, it was hurt a little bit, but then you see other adjacent neighborhoods that seem to be doing that actually had a small net increase, like this one right here. This is considered Walnut Creek. They had an increase of 787 households, and then this zip code, more the city area, had 1,400 minus. But then some of these other, this one had an increase of 708 households. You know, this one right here, 692. So there's actually a little bit of increases in the Contra Costa area, as you can see in this map. But you know, when you look at San Francisco, it's really in the red. So I think that's why uh, county like Contra Costa is doing a lot better compared to San Francisco and Oakland and you know other areas. Maybe people like it how it's less congested than say San Francisco and some of these other areas. Um,
right? There's definitely
and so it's probably a little bit nicer and probably people like that. Like Contra Costa right here, like that has an increase as well, 320 people. So we're seeing, you know, some increases in a sea of red. There's a little bit of increase going on here, but that just kind of seems to be like more of these suburban areas seem to have more of an increase in general, but we're focusing on the Bay Area right now anyway. So that's a little bit of what this map is telling us.
yeah. A lot of it is that there's more open space in these areas. So
Yeah, and they could be building more houses there as well. Um, Less congestion, less traffic might be a nicer place to raise a family, say in San Francisco, under a lot of things that we're talking about. And it's a lot cheaper too. Somebody could be cashing out one of their houses in San Francisco and be moving to Contra Costa and saving a little bit of their money also in the process. So that could be another thing that people are doing. So that could be one of the reasons why Contra Costa County is doing a little bit better than say San Francisco.
yeah, just and the standard of living might be better in some areas that are more rural or more or less congested. So what are some of the things that we can do as Californians in order to improve some of these issues that are going on in these counties that are I'm not sure what there's a lot of policy changes that are going to need to take place, but we have it's a high regulated state, high homeless population. The homeowners insurance premium obviously is super high. What are some of the things that people can do?
Well, I think people really need to research, you know, the different cities. Like if you want to stay in California, like San Francisco probably has much higher building regulations than some other cities. They might tax things like vacation rentals more than other cities. So that's something to look. Say you're wanting to buy a house in California for a vacation rental, you want to see how much that county and city taxes that, or if they even allow vacation rentals in that area. If you're going to buy a vacation rental, you don't want to accidentally buy a house where the taxes are obscene and or it's hard to even get a vacation rental in that area. And that's really important. And other certain counties in California have cheaper property taxes as well, because property taxes is by county and school district, of course. So that's also important to note in regards to that, because property taxes can get expensive for people on fixed income. And then look at the water bills, like certain water companies are managed more effectively in certain neighborhoods. They charge less. Utilities could be less, say Pacific Power compared to PG&E and how they manage their electricity and everything. is an important factor to consider as well. So if you want to stay in California, your best bet is moving into a county that's business friendly, uh, low regulation, and where your equity is going to be preserved, because you don't want to see, because equity is like cash in the bank. You don't want to see your cash wiped out like in the 2008 crisis. You want to be in a nice emerging market, maybe an area that's good for vacation rentals, a good up and coming area, not a stagnant community that's not seeing much growth like certain areas in California, certain cities that haven't been seeing that much growth, and actually more of a stagnation. You want to move into an area that's, better in regards to that. So I think those are really all important things to consider, uh, whether you're selling or buying your house. And if you just want to support the channel and support what we're doing, we can definitely assist you in doing that. My mom has been doing real estate for quite a few years, and I got my license recently, and we can really help you and assist you if you want to sell your house in the Bay Area and say you want to move to Tennessee or something and buy some acreage where you can have your own little farm or something, or if you want to move to some other part of California. It's really up to you, but you definitely need to do your due diligence in the areas you want to move to, and we can help you do that as well.
So one
In
other thing I
regards to
wanted to
that.
add, Alex, to what you're saying is just the increase of construction costs due to inflation. We know that all the materials and the energy costs have increased quite a bit, and that's causing all the building materials to go up, all the prices to go up substantially. And that's another reason why like the homeowners insurance, California homeowners insurance commissioner says that one of the reasons why homeowners insurance premiums have went up is due to inflation. So we have
Right.
the rising cost of building rising costs. And what else? There is another factor that they're bringing into equation that is causing all these permits that people need to pull or all these builders have to deal with when building homes, and that has to do with climate change. So they're telling us that climate change is causing the rising cost of homeowners insurance. And also they're well, at the same time, they're putting policies for new builders that they have to meet certain guidelines in order to reduce the carbon footprint. What do you think about that?
Well, the climate may be changing, but it's not changing as fast as the insurance premiums. And I think the reason for that is we're seeing inflation, interest rates being changed drastically. We're really close to 0% interest rates. Now it's closer to 7%. So, and also these insurance companies have some kind of monopolies too, in a lot of regards. If three companies choose to leave your state, like what's happening in California, that really affects millions of people, unfortunately, in the state. So, that definitely doesn't help. So it's really depends, what state you move to. Some states like Utah, as you said earlier, have really lower insurance premiums, but we're seeing a lot of everything going up just because of inflation alone, and also more regulations as well, and different things like that. But as of, wildfires, I don't think we're having as much as usual this year compared to a few years ago. So I don't really see, that being as big of a factor. But they're dropping people in California completely in a lot of cases.
Yeah.
And it's definitely very odd circumstances how that's going on.
Yeah, one thing that I learned the other day while listening to the California Insurance Commissioner on Cal Fire, California Fair Plan rather, was that actually is run by a conglomerate of insurance companies. It was approved by the state and the governor, signed by the governor, but it is run by insurance companies, which I thought was interesting. So
Right. It's a private public partnership,
yeah,
which I don't think is very good, honestly, because then you're giving a private monopoly uh, to California for the California Unfair Plan, which I think. But, one good thing about owning your house free and clear is you choose whether you want to have insurance or not.
yeah.
So that's one benefit. But if you have a mortgage, you have to get insurance no matter what.
That's exactly right. So if you have equity on your home in the Bay Area and you want to relocate, you might be better off cashing in right now before prices continue to decline. And we don't know how long that
And
will
then
take.
owning your house free and clear can really help you reduce monthly costs for yourself and your family if you just cash in. Say you have $2 million house in the Bay Area, and then you sell it, and then you have $1 million mortgage still. Well, then that's $1 million that can buy you something as nice or better in a different area because that
Buy different
location isn't
properties, or you can even invest in one small place for yourself and get a couple rentals with that equity in different.
correct. And then you'll have actual cash flow. You're not going to be having a net decrease in your cash because of the mortgage and everything. You're going to actually have your houses working for you and not against you.
That's right, Alex. Well, thank you so much for joining us today. Again, I'm going to put a link down here if you need assistance with relocating anywhere in the United States, and we hope to have you next time. Please don't forget to subscribe and share this video with everyone. Thank you.
Thank you for watching.